New data out on inflation, how much prices just increased last month. Chief business correspondent Christine Romans with the latest. How much, how bad, Roman?
Yeah, confirming, John and Brianna, what anybody who has bought anything already knows. Prices for just about everything are going up. In the month, up 0.5% from June to July. That's a steep 1 month move. When you strip out the volatile food and energy sectors, an inflation gain of 0.3%. But I like to look at it year over year so you get a sense of just how much more expensive things are today than they were a year ago. And inflation up 5.4%. You saw a similar increase last month. So that's 2 months of really hot inflation numbers. Going through the categories, just about anything you eat cost more, whether you buy groceries, all kinds of groceries, or you go out to a restaurant. We also saw gas prices rising, housing, accommodation, recreation, healthcare.
Yes, guys, seeing is believing. You actually just saw CNN talking about inflation, okay? Talking about what everybody on the right has been talking about basically since Biden started his spending spree after he got in office. How pouring more fuel on the fire of what was predicted to be a red hot economy that Biden inherited from President Trump would probably be a bad idea, and that could lead to some inflation. Okay, there are some supply chain restrictions that are being aggravated by the fact that the government is paying people to stay at home and not work. So what you're saying, guys, is that in order to meet consumer demand or attempt to meet consumer demand, businesses are having to raise the cost of goods and services, okay? And ultimately, they're going to pass that on to consumers, right? So, yes, you do have, desk jobs, okay, that are paying, $20-$25 an hour that typically would pay $12 to $15 an hour in a normal economy. However, that comes with a cost. That means that everything else is going to cost more around them, right? This is what the progressives don't realize about artificially raising the wage. That means prices artificially increase as well, which means that your dollar did not really get more valuable. You're not really making more money. And, it seems like we're starting to see this happen all across the economy as even places to live, right? Housing has went up, and also people that are renting, rental prices, shelter inflation is also going up. Okay, so all this wage growth that the progressives want so bad seems to be a wash. Okay, as inflation continues to stay high in July as the economy is rebounding. Okay, so let's read more about this because the Feds told us that this was going to be transitory, right? Janet Yellen, Jerome Powell said, trust us, it's just transitory. However, this is like what, the third, fourth, fifth month straight. And like I've told you guys before, if this continues into the fall, then the Fed is going to have to increase interest rates. And I would expect it to happen at the beginning of next year, which again could have some adverse effects on the market. But let's read about what's going on here. Inflation remained elevated in July as the economy continued to rebound amid pandemic-related shortages of labor and supplies. The Labor Department reported Wednesday that its consumer price index rose 5.4% in July from a year earlier, the same pace as in June, and the highest 12-month rate since 2008. Guys, every single month, we're breaking new inflation records, okay? There's a new inflation record every single month. Hey, man, it is what it is. This is what the progressives wanted. In the Biden administration, the CPI climbed a seasonally adjusted 0.5% in July from June, a slightly cooler pace than its 0.09% increase in June from May. The index measures what consumers pay for goods and services, including grocery, clothes, restaurant meals, recreation, and vehicles. The so-called core price index, which includes the often volatile categories of food and energy, increased 4.3% from a year before. Inflation has heated up this year for several reasons. U.S. gross domestic product rose at a rapid 6.5% seasonally adjusted annual rate in the second quarter, powered by consumer spending that climbed at an 11.8% pace as more people received vaccinations, businesses reopened, and trillions of dollars in federal aid flowed through the economy. Now, guys, I've been making videos about this since damn near January, okay? I really have. And what I've been saying since January is that the economy is going to open back up. Biden's inheriting a red hot economy, and it's not a good idea, right? If we're predicted, our GDP is expected to grow at, breakneck pace, right? We're going to have a red hot economy. It's not a good idea to keep pouring fuel on the fire for political reasons. But Biden gambled, and he did that. And what came with that was inflation, right? That's what happened. So, I mean, listen, people are spending money, right? There's high demand. That's a part of what's driving this. However, again, what is happening is that businesses are not able to hire and to get people working fast enough to meet that consumer demand, which means they have to raise prices, right? This is just basic economics, right? Supply and demand. Okay? So, this is what we're seeing happen. And guys, I've been talking about this literally since February, January. Okay? Prices and categories hit hardest by COVID-19 pandemic are still recovering to pre-pandemic levels, including air travel, apparel, entertainment, and recreation. Those prices increases should slow once prices return to normal levels, though the outbreak of the Delta variant of the COVID-19 virus could delay that process, many economists say. Now, this is why I think things kind of get interesting, because they're saying that, once a lot of this stuff passes by, inflation should slow down, right? Once these businesses can get up and going again, they can get hiring people again, we should see this start to cool off, right? That's what they're saying. However, with this Delta variant stuff, guys, to me, it brings up an interesting scenario in which, we're starting to see some restrictions. We're starting to see some more lockdowns, but not too much more. I personally are not too concerned about the lockdowns because I think businesses aren't going to allow it. But in a scenario where they actually force that again, right? They keep trying to hinder the economy in some way, basically restricting the way businesses can operate, restricting what people can do. That can have an adverse effect on recovery. That could slow recovery. In response to that, will the Democrats try to do another stimulus, right? I mean, they're going to try to spend $3.5 trillion on this family's plan, plus the $1.2 trillion on the bipartisan infrastructure package. So that's already what, like $5 trillion? Okay, that they're trying to pour into the economy. That is not really supposed to be like stimulus, right? It's not like the relief packages. So with them doing that, right, if they really want to try to do that, I don't understand how you would spend more money on top of that. So again, it brings up an interesting scenario in regards to how the Democrats can physically, right, respond to this Delta variant, right? They cannot do the same thing that we did last year. They just can't with all the spending that we've done. But I mean, who knows? Maybe they can. The progressives swear up and down that it doesn't matter how much money that we print, right? That's what they say. Booming demand as the economy reopens has outpaced the ability of businesses to keep up. Many companies are passing on higher labor and material costs to consumers. The shortage of semiconductors that has crippled auto production has caused prices to soar for used vehicles as well as rentals. Quote, this kind of inflation is now driven by the fact that there aren't enough cars and that the oil markets are rocking and rolling, that housing construction demand is high, and there's been trouble getting sawmills up and running, said Christopher Thornburg, founder, partner, and economist at Beacon Economics. Okay, so speaking of housing, right, and speaking of rent, the real question is whether or not inflation is narrow or whether it is broad-based, right? And I think that we're starting to see some signs that this could just be broad-based inflation, which really is probably the worst-case scenario to a certain extent, because a lot of people are saying, well, we're seeing inflation, but a lot of it's coming from energy and used cars and stuff like that, things that we know are going to be temporary, right? However, prices keep rising, even in categories like food, right? And things like that, essentials, okay? And what's more essential than putting shelter over your head, right? Putting a roof over your head. These prices are going up too, along with housing prices, okay? As there was an interesting article here from Business Insider that basically argues that rent is going to keep going up, okay, as rental prices are soaring. Pandemic era rental deals are gone. Prices are shooting up, and new data suggests they'll keep climbing at a breakneck pace. The rally began in the housing market, where a buying frenzy dragged national inventory to historic lows and led prices to surge at their fastest rate in 30 years. Now it's spilling over into the rental market. The median apartment rent in the U.S. rose 9.2% through the first 6 months of 2021. Rental website Apartment List said in a June 29th report. That compares to the typical first half growth of 2 to 3%. June alone saw the website's national index leap 2.3%. The typical price nationwide now stands 2% higher than had the pandemic not taken place, according to Apartment List. That overshoot is concentrated in growing markets like Austin and San Diego, as rents in the largest metropolitan areas remain below the trend. Quote, whereas last week's peak moving season has been halted by the pandemic, this year's seasonal spike appears to be making up for lost time. Apartment List economists Chris Salvadetti, Igor Pavlov, and Robert Warnock said in a blog post. The elevated price growth isn't likely to cool off anytime soon. Logan Mohtashami, lead analyst at Housing Wire, said millennials are set to power unprecedented demand over the next 3 years throughout the housing market. That shift will drive an even bigger gap between supply and demand, the analyst said. Quote, we've never built enough apartments anyways, and now we have the biggest household formation demographic group in history, he said. He told Insider. Whether or not they're buying homes, they still have to live somewhere, so yeah, rent inflation should pick up. Rising rents pose a larger than usual risk to broad price growth. Shelter inflation is stickier than inflation in other categories, meaning it's less likely to immediately cool after leaping higher. And that's bad news for the Biden administration in regards to inflation, because even if we see a cooling off in certain categories like energy, right, used cars, even food, things like that, if rent prices are still climbing, right, if we still are seeing shelter inflation, that could stick around for a while, right, which could continue to drive up the overall inflation numbers. And again, that could pose a problem for the Biden administration, okay, in regards to the idea that, hey, you're overheating the economy, right? You're leading to a situation where people cannot afford to pay rent, right? That's already something the progressives talk about a whole lot, how people can't afford to pay rent. But what's happening right now is that problem is getting even worse, right? Along with rising prices. So not only is it going to be hard for millennials to buy a house, right? I mean, the home ownership among millennials is pretty low. It's also going to be hard and expensive for them to rent as well, right? Which, I mean, in the long term, I guess that could lead to more, apartments being built, which I guess maybe over the long term, there's an argument to be made that could, bring down the price of rent maybe like 4 or 5 years down the road, right? Because now we have, more apartments, right? More supply, okay? Because there's a ton of demand in that area. It could stable out over the long term. However, overall, these inflation numbers is not looking the same way that the Fed told us that they would look, right? When they initially said, it's transitory, it'll be a few months, right? It'll be maybe 2 or 3 months. I think this is probably the 3rd, 4th, or 5th month in a row where we've seen these numbers. But like I said before, and I'll continue to say it again, if this continues into the fall, I would expect to see the Feds start to make some monetary policy changes in order to try to take some money out of the economy, right? Make the borrowing of money a lot, more expensive, so people don't borrow as much to, invest into the economy, and which could again have some adverse effects in the market and the economy overall. Okay, so we will see what happens, right? But let me know what you guys think. Make sure you like, comment, and subscribe. Most importantly, share a Black conservative perspective. Peace.